Happy 4th of July, everyone. So let's take a look what's in store for crypto for the month of July. Now, we're getting a lot of these Hopium posts from a bunch of users that are showing us, one of them was showing us the gold did the same inverted head and shoulders in 2007, from 2007 to 2009, and that Bitcoin is following a similar path. Then another post about the inverted head and shoulders again and targeting 240. Now, this is pure nonsense. Why is it pure nonsense? Well, because this thing can easily go up as much as it can go down. And the chances are that this is not the bottom yet. Now, we can get a bounce up because in July statistically is usually a bullish month for stocks and risk assets. Out of 20 years, I think 15 or 16 were quite bullish. And then we go into the August sell-off in September before the year-end rally. Now, all of this might happen, might not happen, but making these projections is like pulling stuff out of your ass, because literally, if this does happen, obviously this person, whoever posted this, will pull it out and say, "Oh, look at me, I'm a genius." And for the most part, 90% of these predictions don't come true, and nobody ever remembers that, right? So in a week, we're all gonna forget about all this. Now, nobody should be making these large forecasts way into the future. Why? Well, because you literally should be understanding how the price moves and watching the price instead of just blindly making projections based on absolutely nothing. But that gold in 2007 made a similar head and shoulders. Yeah, and I can show you 20 charts that they did the same thing and then rolled over to the new lows. Plus, with this calling this low, this head can extend all the way down to sub 10,000 easy as well. And now, why do I say that this crypto winter might be a little bit different? One of the decent websites on the internet is called Wall Street. So play on Wall Street. Wall Street. Anyway, that's what's different this time. Stuff blows up because of the leverage and cascades through the crypto space because everything is interconnected. So because of crypto world being so interconnected, all the firms borrowing from each other, now they're all in trouble. And Sam Bankman, how appropriately is he named? He's going to own all of crypto companies in about a month. And so even he says more exchanges will fail, blah, 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 blah. So if they're going to be failing, that means they're going to have to be selling their assets. If they're going to be selling their assets, the price of Bitcoin is probably still going to be dipping. Plus, it will, as more of these exchanges and funds and companies unravel, it will further have a bad news cycle that will put pressure on Bitcoin price. Now, let's take a look at the Bitcoin price itself. This is a daily chart. So, as you can see, Bitcoin loves to sell off, then to do a sideways consolidation into the moving average cloud. Moving average cloud is simply a value area. And it did it here, it did it here. It went a little past it, then reversed. Once it starts trending again, we did it here. Now we did a big one over there around 30,000, right? As soon as we hit the moving average cloud, we had a reversal signal, and that was the top. And now we're pretty much doing the same thing. I think we're going to be, we might have a bounce up, a bounce down. It's just going to be sideways chop for a month or so, maybe more, maybe less. We'll see. But idea being that it's going to consolidate until we hit this value area. Once the value area and the moving average cloud coincide, that's when we'll see either a major move up and in the form of a breakout of the channel, or further continuation, which I'm thinking still in the cards. Why? Like I said, because the leverage in the system is, and interconnectedness of the system is still hasn't flushed out bad money out of it. So once it flushes it out, that's when you should be stepping in and buying majority. Obviously, if you want to hodl for the next 5 years and you want to buy, let's say, 10-15% of your 10 of your cash available, then you can easily deploy 10 to 15% here, maybe 20. And then when it goes to 14, if it goes to 14, you can add another 20%. If it goes to 10, add another 20%. You basically layer in for the long run, and your average price is going to be pretty decent. If you just deploy all of your cash in one shot at 20,000 and it goes to 5, well, that's a 75% loss right there. So maybe it makes more sense to layer in, as what this is what Wall Street professionals do. They layer in into the positions. They don't. If I have $1 billion to deploy into stock market, I don't just deploy the $1 billion like most traders do with their one lot buying of forex or whatnot in their trading. So when you have that size of capital, you have to deploy it by stages, because you're not going to time it absolutely perfect every single time. So if you want to day trade it or swing trade it, fine. But if you want to hodl it, just start layering in 10-15% at a time. Now, so this is a daily chart. I think that we still have some sideways to go. We are oscillating around. We're oscillating around 2017 high, previous all-time high here, and we're just oscillating around this number, around between 17 and a half and 21 and a half, 22,000. So this is the new range, kind of like we did here, 4 or 5,000 point range, and this is what we're doing. So this is the bottom of the range, this is the top of the range, and now we've been selling off in this channel. So we had on last day of the month, an hour before the daily close, we had this pop. Somebody probably closed their short position, so they had to buy it, and we had this huge pop in price, and then it sold off again. So now we are facing again the heavy resistance. So the 2017, this red line right here in the middle, is the 2017 previous all-time high, and this is where we are just basically underneath it, consolidating, and this is the channel we are working on now. So I think today, since it's 4th of July, it's a short week, and all of the US traders are barbecuing and celebrating, as I will be doing myself soon. This is, you should just leave this alone for now. You should watch the breakout. What you do is you set an alarm above this point here. So this point here, and below this point here. So this huge candle, you basically put if it starts breaking out, you know how to react, and you can probably scalp it to the range high. Or if we start rolling over, that means we're probably going to retest the range lows around 18,000 or slightly below. So this point here, let me actually. So that's the play I would have for the upcoming week. Follow the price. Stop looking at these idiotic charts that project 20 years into the future with $1 billion projection. It's all nonsense. Just do basic technical analysis. Understand how the price moves. Has it been making higher highs and higher lows? No, it's still selling off, and that's what you should be doing as well. You should not be buying aggressively when the price hasn't shown you a single clue that it's bottomed out. So at least when it starts making higher high and higher lows on a daily, or at least in a 8-hour or something, that's when you might start consider things. But as you can see, it's just consistently making lower lows, lower highs, and keeps going down. So why read into the absolutely baseless hopium instead of actually following what the price is telling you. And since the sell-off in stocks is probably not done either, with more and more bad news coming in from every single angle, I think that this is still not the bottom. And if it's not the bottom, you can layer in, if, like I said, if your investment horizon is 5 years out, 14,000 or 18,000. If it goes to 100,000, it's not going to make a whole lot of difference to you. But if you're trading this, trade smart. Let's see what the price is doing. Stop. Look at the volume even. It's mostly red on the daily, right? You see those huge red spikes, kind of like it was here. It's still being dominated by the bears because they're unloading their positions. And again, last crypto winter we had mostly retail traders and very young retail traders, with mom and pop boomers sitting on the sidelines waiting for their opportunity to pounce. And when the price went from 20,000 to 4,000, a lot of people started buying in, coupled with the stimmy checks and all of the good stuff. We drove the price to almost 70,000. Now, today, all the mom and pops, they're stuck at 50,000 right now, a lot of them. And they're just praying to Jesus to see a break even and never touch crypto again. So as this price might start bouncing, you'll have a lot of people who are stuck in the $30,000 range, 20-something thousand dollar range. They'll just they'll start dumping out of their positions because they've been holding a bag of shit for so long. And so for now, until the price will start telling you to make higher highs, higher lows, do not trade it aggressively to the top side. Again, you can intraday scalp, but for the long-term hold, the price hasn't given any clue that it has permanently bottomed around 17,000 level. So again, hope you enjoyed the rest of this Monday, and tomorrow we'll probably see some fireworks, as with the long weekend a lot of US traders will return, and we'll see some volatility hit the market. All right, hope it helps. As always, stop by a free Telegram channel where we discuss all of this live. And if you don't want to trade alone, learn a thing or two, more than welcome to stop by, say hi. Also check out apexbull.com, and if you like, subscribe. Please subscribe, as we appreciate it, and it helps other people discover our material. All right, hope it helps. Enjoy.